Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing quite significant previous monthly support from which all these moves to the upside were created, which is currently acting as resistance. Now, until the market will remain below this previous monthly support and resistance, we could expect more potential bearish development away from this zone. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, it is important to keep in mind that in creating this move to the upside, the market is also currently creating a W formation. And after the creation of a W, what we could expect is a potential move lower for the completion of the W formation at the neckline. It is also important to keep in mind that at the moment we are approaching a quite significant trend line. In fact, what we can see is that the market has been respecting this trend line all along, getting first tested as support and currently as resistance. Now, until the market will remain below this previous weekly support and resistance, it could easily be rejected to the downside. So what we can see here is that all this area is quite strong resistance both on the monthly and weekly time frame. Now, since we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly in this area, further increasing the probabilities of a potential move below this zone as the market is currently testing it. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, we can notice that in creating this move to the upside, the market is also creating this kind of weird overextended W formation. And in general, after the creation of an overextended W, what we could expect is a potential reversal lower. For the completion of the pattern, at least at the 0.32 of the Fibonacci taken on the impulse leg, which in this specific moment is lining up at this level. So what we could expect here is to see more potential institutional shorting inside of this zone, pushing the price lower for the completion of this overextended W formation and rejecting the monthly and weekly resistance levels all the way down to this 0.32 Fibonacci. Now, if we go and see what we have when it comes to the commitment of traders, so what institutions are doing, and we check the data precisely for the CAD, what we can see is that with the last reports, net positions have been increased. We went from minus 33.5k net positions to all the way to plus 6.3k net positions. So we went from having way more shorts than longs with 61k shorts compared to only 28k longs, all the way up to currently having a positive net positioning of plus 6.3k net positions with 36.2k longs compared to only 29k shorts. So the CAD is actually currently getting quite strong, making USDCAD weaker. So there is definitely the possibility to see a potential reversal lower below this area. So how we could be approaching this potential move lower if institutions will continue to add shorts instead of this level. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. Now, by the way, I did speak about USDCAD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection higher. Again, from here, I explained all the reasons for which we could expect a move lower below the zone. Then we had the creation of this W, explained all the reasons for which we could expect this rejection to the downside. And then I wanted to see a break below this support. The break of support never happened. At that point, it is clear that the market wanted to continue higher, and in fact, it did. And by the way, I will link in description all this previous analysis, so you can go and check them out for more free education. Now, as I was saying, we have to be reactive and not predictive. So potentially also with students, the way in which we could be approaching it is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the completion of this overextended W formation, at least at this 0.32 of the Fibonacci taken on this impulse leg. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. Go and check it out at transparentfxtrading.com. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.